Happy Tuesday.
Happy Tuesday.
Sorry, we're a little bit late today. Technical difficulties, which should be no surprise to anybody from our end.
At this point, we're like,
listen, we're doing great.
We're doing the best we can.
Yes. So let's talk about it. What's been the hot topic this week before we get into it is Redfin and Rocket Mortgage. I think it's been top news. And I'm sure a lot of people in the broker world, as well as in the real estate world, are really curious what that's going to look like for them, because historically Redfin has been a W-2 company for realtors. Is it going to look like what Zillow and Zillow Mortgage looks like? Is it going to pull business from realtors? Because now you've got the Powerhouse Broker, which is a reason that I've never partnered with Rocket, to be honest with you, because I don't think that they're in for the best of the consumer. I think they're in the best for the bottom line. And I don't like that.
Yeah, I think it's going to be interesting to see how it impacts everyone in the industry, right? Yeah. More so real estate agents, like, are they going to feel more inclined to work with Rocket now or not? So, I mean, we'll have to, it's one of those things that's up in the air right now. So many details need to be ironed out for us to really see the impact of it. But it definitely is something on our radar that we have to stay up to date with.
Yeah, and I think just reinforcing as realtors out there, just really reinforcing your market locality that you know so much, because I think they are going to try to make it much like a Zillow platform, if you want to call it that. And it can be frustrating when these things change. But as we know, like Zillow came out with their Zillow Mortgage and it really hasn't done much. And so I think just showing your expertise and that you're not just a phone picker-upper is important anytime these changes happen.
Yeah. We'll have to, and like you said, I think it's going to be very much so market specific as well, to see if specific markets are going to be leaning more towards that route versus others. So, because I think a lot of clients, when I speak with them, they like that connection with us and the real estate agents. Whereas I feel like when you go through a platform like that, you're really not getting it, because you're just kind of getting thrown to whomever picks up the phone first, so it'll be interesting to see.
Yeah. And, we've seen rates steadily decline, which is good. It's important to have your clients call and just check and see if that gives them more qualification, what that looks like for them. We're happy to run any scenarios and just give sound professional advice. But I think we're seeing a good trend.
Yeah. And I do want to point out because I know we are expecting a federal meeting here in the next couple of days. And it is projected that we're not expecting a rate cut during this March meeting. Now in May, there is a probability that we are going to be getting a quarter. And again, this is the federal funding rate. It's not mortgage rates. And then in June, same thing. We may end up with one or two by then. But this month, at least, we know we're not expecting a rate cut. And if we don't, it'll definitely.
A number one thing to point out too now is that just because the Fed cuts rates does not mean your mortgage rates. That actually can mean the opposite. So we don't want to necessarily see them unless our economic stats are good, because that's going to put fear in the industry and it's going to cause mortgage rates to actually go higher.
Exactly. And I feel like if there is noise that, hey, we are expecting a rate cut, investors are going to start adjusting their prices and build that cut in there, right? Not the mortgage rate cut, but the pricing, they're going to adjust it. So when the news does break out, we're not going to see instant change in whether it's rates or cost. So I think that's very important for people to understand that just because we are expecting or not expecting a federal rate cut, we're not necessarily seeing it instantly on the mortgage side.
And most of the time it's built in with the noise too.
Yes.
Like the noise that's built in. So I think mortgage applications increased 9% last week. And I believe the week before was like 22%. So it was pretty crazy. But we all know that have been in this industry for some time that COVID was crazy, right? But
Right.
that is the norm. That's actually pretty good. So things picking back up. Yes, you had listings sitting for a little bit, but don't fret because people have had listings sitting for a little bit and then they're gone now and multiple offers and so forth. I had multiple situations this weekend that I was calling agents because there were multiple offers, and I haven't seen that in a long time.
Yeah, I've seen that on my end as well, where, I think as loan originators, it is our responsibility to call those sellers, the listing agents, and just let them know, hey, we have done our due diligence, answer any
Yeah.
questions that they have on the pre-approval. And I think that's like our best kept secret, because when we call these agents, they're like, oh my gosh, thank you so much. But I'm seeing the same thing where we're having to make those phone calls to really solidify that offer for our buyers. And our agents and the buyers appreciate that, right? And the spring market is heating up. I mean, we
It
always
is.
know it heats up in the spring, and there's definitely more inventory. And with the impact or the improvement on rates, I feel like people are a little bit more comfortable, and they are, it's creating favorable conditions for the buyers for sure.
And another thing too is something that might surprise people is that refinances were up 37% this week and 83% from a year ago. But let's talk about why, okay? Because it's not because of rates. Let's just be very clear. Because we're sitting about where we were a year ago, if we want to be honest.
Mm-hmm.
But it's because people have other debt that they need to take care of. So they need to tap into that equity. And so that's where these refinances are. So encourage your clients if they're calling you for certain things, hey, maybe taking your equity out to put down and turning this into an investment, whatever, like, or paying off debt so that they can qualify for something in the future. Just tapping into that equity for useful things. That's why it's up, is because of that, not rates, because no one's trading in their 2.875 unless they're paying off a lot of
Yeah.
yeah.
And then a HELOC is always a good option in that case as well, if it is to consolidate some debt.
Yeah, and as professionals, we're going to make sure that it makes sense for them across
Yeah,
the board and
definitely.
not just, there's been plenty of people that call me, they get the flyers in the mail, those spam flyers that we get. That's like, the other day I had a client call me and it said, oh, we'll get you 5.625. Her mortgage rate, she didn't even know, was 4.6. 4.6. And she's thinking that this flyer is meaning good news, but she didn't look into it, which is crazy because she would have went up 1% in interest rate. Could you imagine?
Yeah.
But they spread it out over that 30 years again. So that's why it's important to have somebody that you trust. Very important, instead of just a money grab.
Yeah. And don't pay attention to all that junk mail that comes in, because 9 times out of 10 it's just that, it's junk. And then also something that I read that was very interesting, because I know there's a lot of new construction, at least here in Central Florida. It's like everywhere you turn, there's new construction going up, right?
Mm-hmm.
I was actually just at 2 open houses this past weekend in new construction neighborhoods and in a new development. And it was interesting to see how people that have already bought in those neighborhoods are like, wait a minute, like so much is coming up. Like there's a Publix coming up. There's so much development around these newer developments, right? So obviously the property values are going to go up, but
Yeah.
because of tariffs alone, the home prices are, for new homes, it's expected to go up about $7,500 to $10,000. So just keep that in mind when you're out there shopping new construction, because you may start seeing a bit of an increase on those purchase prices due to.
And we already know that they increase, first of all, to build in. They're not just giving you free money. Let's be clear. These builders are in it for the bottom line. Okay. So that's something to look at. So now you're overpaying for a house that, has been put up very quickly. Most times, definitely get your inspections on new constructions.
Yes.
But so it's important to look at that and make sure that you look at all of your options. It's kind of like our grandparents said, it's not built like that anymore,
Oh yeah. No, I hear
that the same anymore.
But I mean, you can, because I mean, you drive by one week and they're just breaking ground, and 2 weeks later, it's like, wait, there's a row of houses, like homes here already. Like, what just happened?
Exactly.
Do these people even sleep? But
I think the biggest thing is we want to ask, like, what do people want to know? Like, please make your comments, message us. Like, we want to give you the information that you want to hear, to keep you informed and help you with your clients.
Absolutely. And I mean, I know last week we mentioned bringing some guests on our live, which I personally love that idea. So if you feel like you have any information that you want to share or come on this platform and speak and join us, definitely let us know. We're more than welcome to have, get you all set up some way, somehow, but we'll figure it out.
But we want to just talk about, industry updates and so forth each week, and just any questions that we might be able to help you with, because you don't know what you don't know, and it may help somebody else as well. So
absolutely.
Well, thank you guys for tuning in.
Yes, thank you so much for tuning in, and we will be here next Tuesday at 10 a.m. Eastern Standard Time.
Bye.
Bye.